All right, we're back. Senior markets commentator Michael Santoli is here now at Post 9. This has been, in many respects, as we said at the top, an ignore the noise market. At some dark periods, or theoretically so, the light has shined through in short order.
Yes. Well, the way I would read
it
is the market is trying to get off easy, and it's trying to protect these levels that would keep this a very routine little episode. That would be we 3 times go to 4.3% of the 10-year this morning. Then it gets bought. Yields come back in. We kiss 20 on the VIX. Comes in from there. Almost get to the 50-day moving average in the S&P. Not quite. We bounce from there. We go back to break even on the year. That's where we are on the S&P. And everyone's happy that we're going to hold that level. And I think that that is perhaps a sign of resilience and the fact that the investors are not going to be pulled away from the baseline case that we have, a reaccelerating economy, earnings are going to be good. Maybe the Fed can cut the whole premise. I do think, though, that we don't have a whole lot of an uncertainty premium built into this market. If events dictate that we need more, we're going to have to talk about it. Meanwhile, if you're an index investor, you're flat since late October. And so, you know, is it meaningful that the S&P made all these approaches at 7,000, couldn't get
in public? Barrett asked about economists' contention that there would be a recession, to which Sauer responded, the market went up the 3 days after Cook was fired. Sauer also said the president determined there would be irreparable harm to the public's perception of the Fed if Cook was allowed to remain in office. He was questioned on that, whether there was some sort of factual basis for the president determining or making that determination. Alito also asked why this has been done in such a hurry. Obviously, a very important case for the independence of the Fed, with the Fed chair in attendance. Dave will be continuing to listen, but we have not heard the Cook's side yet, and whether the justices are going to similarly be skeptical of Cook's argument as well.
How long do we think this will go on, Steve?
Well, we thought the arguments would be done in an hour, but they were still, as just a few minutes ago, peppering Sauer with pretty important questions. So it's unclear. But right now, it sounds like there's a lot of skepticism about this issue, whether or not the president was correct in his removal and where the law is on this issue.
Okay. Steve, thank you. Steve Leisman. Obviously, given all of our coverage from Davos, a number of other things, we haven't really had a chance to focus on some of the movers in the market. Did want to note shares of Micron, AMD, ARM, Intel, all up very sharply. You can see that move in Intel, which is now approaching a $280 billion market value, Carl. Of course, well off what were the lows that we saw not even that long ago, but before Le Boutin took over. It seems to be a focus perhaps on CPUs and the data center, but not necessarily as focused on NVIDIA's place there as much as sort of those that also provide into the data center and things around it, or things around the servers that help there. Obviously, Micron with memory, AMD with CPUs, Intel as well in that area, and then ARM sort of around the whole design.
Yeah, Intel, that's a 3-year high on Intel this morning. I'm trying to remember the government's cost basis, but it's certainly maybe around 30-ish. Do you remember?
Yeah, it's a lot lower. I know that much. Yeah, I think it wasn't quite a $100 billion market value, but it was, what was it, a $10 billion investment at that point.
Right.
And certainly it's got to be a lot more than that. So I'm not sure where it goes, or is it a part of the sovereign fund that we may have? We'll get back to you.
Sarah.
American people, back to taxpayers maybe, would be something for that Intel deal. When we come back here in Davos, software taking it on the chin this start the year. Why it's a huge buying opportunity, according to the founder of private equity giant Thoma Bravo. That's next. And then later, IBM CEO Arvind Krishna with me here at Davos on what's next in the AI arms race. Don't go anywhere.
Figure it out. What in the world is up with this name, Josh? What gets this thing moving again?
Look, I think the iPhone unexpectedly was a hit, and it's the first time in a while that we've been able to talk about growth beyond just a replacement cycle. I think that's super positive. When you look at some of the legal challenges that people were worried about with this name, they seem to have come out okay on the other side. There are still overhangs here, but they're even doing better in China, and that was something that people were wringing their hands about. So, look, I think it's a very large stock. It can often be used as a source of funds. A lot of times you'll see it come down for no apparent fundamental reason, and then all of a sudden just reverse. Sometimes that's because Berkshire Hathaway is liquidating more of it, which may be the case here. They've been net sellers for a while now. There's a lot of reasons why you could see the stock sort of coast lower, but context matters. It made a new record high. So this sell-off didn't start from the name being in a 10% correction. It made a new record high, and now we're witnessing a pullback, and it's fairly ordinary, fairly gradual. The stock is nowhere near any critical long-term trend level or moving average. And, in the end, I still think this is a business that buys back a ton of stock this year, has decent earnings, not blow you away growth, but investors are willing to pay up in multiple for the reliability of those earnings. It's the same reason Walmart, Costco, all of these stocks are selling at very high valuations because we care more about will the earnings show up than, oh my God, why aren't they growing by 20% anymore?
But that's an interesting point. When you say they pay up in multiple, this is the question that we always ask. What is the right multiple? So when I look at Apple here, 10%.
You've hated this stock for a long time.
Because it's boring and it gets more attention than it should. And it trades at 30 times. What's the right multiple? Is it 23 times?
Are looming large. Starting on Wednesday, Meta, Microsoft, Tesla. Thursday brings us Apple. You all know by now, you got to wait a while for NVIDIA. But these are the ones right now, Bryn, that matter. They always matter. I feel like maybe they matter even more. Why? Because tech has lagged so much to start the year. Nowhere to be seen on the best performing sectors list, where energy leads the way and materials is next, and industrials follow that, and then on and on and on. And then you finally get to tech, which is down 1.25% to start the year. What do you think?
Well, it's been a great 1, 3, 5, and 10 years for tech. So it's nice that some other sectors are actually starting to perform and pull up the weight. I own all of those stocks except Meta. I agree with you. I think next week is going to be incredibly important. Meta does not have a cloud, so they have advertising. So we're going to need to hear how they're going to monetize all of that spend. I mean, is this going to be a metaverse 2.0? You have Microsoft, which is in the software space, which everyone's like, software is dead because of Claude. And so with Apple, looks terrible technically. And so I think you have this, very distinct set of circumstances with these companies next week. And I think investors want to know, do I want to keep these heavy positions or do I want to continue to diversify? And so the jury's still out, but I do agree this is going to be really important for all three of those. I feel Tesla is less important because we're more interested in what's happening with robotaxis. We know that earnings I don't think are going to be great from car sales, but the investors have been more than happy to discount that and say, we will give this stock a high multiple because of the future earnings of Optimus, robotaxis, and Cybercab.
Let's show you once again the mega cap performance year to date, just to give you a scorecard on what we're talking about here. You know about this huge run in Alphabet, which is up 5.5% year to date. It's picked up right where it left off in 2025. Amazon, has it woken up? Maybe. It's up 4%. You could make the case, I think Bryn's right, that Meta is the most important next week just because of that big slide last quarter. Weiss, you take a look at that. Could you make the case that it's Meta? Remember the stock?
Yeah.
What it did after earnings last time? Because, Mark Zuckerberg, they talked about all the spending that they're going to do. Could you make the case it's Apple, which is off for 8 straight weeks? They have a lot to say. Could you make the case it's Amazon, which did next to nothing last year but is off to a good start? Maybe Microsoft, stock up 5% or so in the last 12 months. There's a lot going on here and a lot to prove.
And I think Apple's a completely different bet because the bet there is, will they be in AI or will they not be in AI? So you're going to need an announcement like that in the call. I don't think you're going to get it.